Hello, good morning, everyone, and good evening, good people from other parts of the world. I'll be starting in exactly at 11 India time. Still 3 4 minutes are there, so I just wanted to say that hello, I'm there. And yeah, hello, everyone. Good morning, Rashmi here. And just before we start, uh, if your video quality is not good, you can improve your YouTube settings on the phone or laptop. So on your YouTube channel, uh, on the right hand side, there are three dots, and you can increase the quality uh, by clicking there, improve quality, and the quality should be good then. And also, let me uh, tell you that since everybody is using internet, at times globally internet infrastructure is under pressure, so you might see a 1 or 2 minute delay in my as I'm streaming. So I can see that at my end that there is a 1 or 2 minutes delay after I talk. Mm. Uh, so before I start my talk, let me give you some disclaimers that in my talk I is not against any country, religion, or people. No individual investments will be discussed in today's event. This event is only for Indian residents and not for the residents of US and Canada. I'll be taking questions. You, I'll be talking for 30 minutes first. After 30 minutes, you can post questions on text on the YouTube, and I'll answer them in the order which we get. Also, I'm not promoting any particular investments. This webinar is only on how we should navigate through this tough times financially and what it means. And this is about that. Now, as we know, this coronavirus is event of a lifetime. In our lifetime, we had never expected to see this kind of stuff. Our previous generation had seen World War One and Two, and but we had never seen this kind of a global event in our lifetime. And it's very unfortunate that 6 months back, if somebody would have told us that the entire world is going to shut down and all international flights will be closed, people will be working from home, and we would have said, are you talking about science fiction movie? So this event is like no one ever predicted, correct, that this is going to happen. So what is the current situation now? So at a high level, today, as I'm talking, 80 to 90% of the world is now under lockdown. And this has happened for the first time in the human history. We had much bigger events than this, catastrophe events, but the world was never under lockdown. This is the first time in the history of mankind, 80 to 90% of the world is under lockdown. Can you believe that? Second thing, the schools flights, international flights, all commercial offices, everything is shut down. I'll give you other experience. 40% people in America eat food out every day in restaurants. All those restaurants are shut down. So 90%, 95% people now eating food at home, which was never the case. Same case must be in India and then globally, correct? So that's another big thing happening. Social distance have become mandatory. We never knew social distancing was before this event happened. We have, if you see any place in India is so crowded, you go to any big cities like New York, Dallas, any part of the world, it's crowded, correct? And social distancing, we never knew about it, and that has happened. The other thing which has happened, the disruption, the speed at which the disruption has happened is the fastest. It's like you're climbing Mount Everest and you miss a step and you fall down. So that speed at which you come down, that is the speed at which the whole world economy came to a standstill in a period of 8 days. Between March 15 and March 25, that those 10 days, the entire world went at a faster speed of shutting down, which human beings have never seen or experienced. Now, that is the other thing. Now, there are two things this coronavirus has got, correct? It's a very unfortunate event, but two, there is a science behind it, nature, and there is the emotions of humans, correct? So, science, Mother Nature, and emotions, and when they all three work together, it becomes a very toxic. So that's what is disrupting the whole world economy today. So, and emotions are very powerful, human emotions, and so I'm going to talk about that, how we navigate, how we control our emotions through this tough time. Now, the other thing I have observed in this event, this kind of shutdown would not have been possible 20 or 25 years back. So in 1980s, the world, if this kind of epidemic would have happened, coronavirus would have happened, world couldn't have shut down. Now, why this time we could do that? Because we have internet, we have cloud computing, and the whole world is interconnected. And because of this interconnections and the infrastructure of internet, people can work from home, and most of the data is on the servers in the cloud. People can work remotely. So, like, take my example today. I'm in Dallas. I'm talking to you from Dallas in India. Now, this kind of thing would not have been possible 25 years back. Television was there, but you can't work on the television, correct? Everybody can't work. But on laptop, through internet, you can work, have access to information, and that has so it has been possible. So that I want you to know, telecommunication and IT infrastructure has connected the whole world. There are no boundaries. We are all interconnected, and that's what we learned, and how powerful that is. Now, the other thing which we observed in this event is the physical economy has got impacted all over the world. So there are two economies, digital economy and physical economy. So digital economy is working fine, and in fact it's growing in this times, bad times. But the physical economy has got impacted, where people meet, exchange, do business transactions, talk to each other, go to movies, go to theater, travel, tourism, all those schools, colleges where physical economy is there, we buy a product, all that economy has been impacted because of the coronavirus. But the digital economy is there. We can connect ourselves, we can talk to family members on WhatsApp, on phone, we can share information, we can shop online, so the digital, and we can pay online. So that's another unique thing which has happened, and this kind of thing has happened for the first time in the world. And what it's going to do is it's going to increase the importance of digital economy going forward. It's going to be, the digital economy is going to be more. So recently somebody asked me a question, is globalization going to be in the reverse direction because of coronavirus? My answer is no. And a few of the speakers I saw on television from Harvard, they said the globalization is going to increase because of coronavirus. We are going to become more interdependent and it's going to be one world now. And that's what we are seeing this time, correct? Every country is working with each other to resolve this problem. So that's another thing we have noticed. Now, in this kind of economy, when the whole world is shut down, still certain sectors are working. Which are the four sectors which are working? Healthcare, the doctors, nurses, healthcare professionals, hospitals, everywhere they are in operations. IT and telecommunications. As I said, without IT and telecommunications, we couldn't have a closed down lockdown. No government could have locked down the whole world economy without IT and telecommunications. And through IT and telecommunications, the government is able to control its population, and that's what it's doing. Financial markets worldwide, banks, stock market, bond market, currency markets, they're all working. So 9/11 time, the financial markets were closed for 5-6 days. That kind of stuff has not happened this time. No stock market in the world has been closed, and that's the another lesson we have learned, that okay, if I have a property, so during the times of crisis, if I want to sell a property, I can't sell, but I can sell my stocks, I can sell my mutual funds, and I can get cash. So the financial markets have been a very good buffer. So that's a very plus point. And government agencies and basic grocery services are open. So these four sectors are still working and they are growing in this economy. So if you have noticed that in India, the pharma stocks have gone today to pre-coronavirus levels. So there is no correction. In fact, they have gone up. Yesterday they were up by 10%. Today they are up by 4%. And in last week they had also moving up. So the pharma sector, healthcare sector is moving up. And that's same case is going to happen to the IT and telecommunication sector. So I'll talk about this more as in the next few slides. The other thing we have noticed, this coronavirus, three things are into play. One is geopolitics also is playing. Science is playing its role, Mother Nature is playing its role, and the human emotions. These four combinations are playing, and how it's impacting your wealth, I'll share that about it. How we navigate this, that I'm going to talk about it. And I said, globalization is going to increase. It's not going to reduce after this. We are going to get more interconnected. Yeah, and first time, as I said, 40% of the people who are eating food outside have restaurants on a daily basis. They have to eat from home. So which are the major sectors where impact have a catastrophic impact? Number one is travel and tourism industry. Let me tell you one thing. Travel and tourism industry is 10% of the world global economy. That 10% of the economy has totally shut down. Now, this 10% of the global economy in revenue terms employs more than 20% of the manpower. That includes hotel and hospitality both. Now, this biggest sector, which has the largest number of employees in the world, has been totally shut down. And that has caused a chain reaction of everywhere in the world. Then the third is because we are not moving, we are not driving cars, the planes are not flying, international planes, oil industry has got impacted. Plus, the oil industry has got also impacted because of the geopolitics between Russia, Saudi Arabia, and America. So that geopolitics couldn't have happened at the worst time than this, correct? So that has become more toxic, and that has also impacted the financial market. And today, domestic flights and international flights, now international flights are totally shut down worldwide except for a few emergency services, but domestic flights are still operating in America. They're still operating in US. In countries like India, domestic flight services have stopped. Now, what is going to happen? and real estate industry, correct? The real estate industry, which was already under recession in India, got a very big blow. And people are going to reevaluate the need for real estate going forward because of coronavirus. And especially now, even commercial real estate is going to get impacted because all these malls and offices, they have learned a new thing that people can shop from home, people can work from home. So I don't need expensive commercial real estate. Before this coronavirus, only 3 or 4% of the world population used to work from home because of their special needs, and mostly because of health issues or family issues. 3 or 4% of the population was working from home. Today, almost 70% of the population is working from homes. Forget about the regular employees, even the politicians are working from home. Even TV anchors are working from home. So, that has opened a new dimension how people are going to work going forward. And many companies and many CEOs have realized that I don't need expensive real estate. People can work from home, and that work from home culture is going to have its own impact, a behavioral impact and lifestyle impact on the economy. I'll share that with you. The other thing, what I have noticed this time, the world which was growing at 3%, now it's going to grow at 2% as per the World Bank. India is going to see the lowest growth rate in the history after independence. Is the slowest growth. It may be 3 or 4%, and if this virus, the lockdown continues for another 1 month, it will be even more slower. Now, I hope so it doesn't happen, but we'll come to know in next few days what things are there. Now, as far as US is concerned, they have, in last 2 weeks, they have seen 10 million jobless claims. Now, that 10 million does not include people in New York because they didn't get time because of the total lockdown to file the application. So this week's numbers is going to be even higher. And they expect that in US, in over a period of next 2 or 3 months, there'll be 30 million people filing for unemployment benefits. And that's the highest in the history of America. Even in Great Depression, the maximum unemployment rate was 10%. This time they're going to see 20 to 25 or even 30%. So imagine what this is going to impact. But still, there's some silver lining in all this pain, and how we navigate through that I'll share further in my presentation down the line. Okay, let me repeat here that if you have questions, please text them after my talk. I'll answer those questions in the order which they have received. Now, what are the challenges? So how do we navigate? So what is going to happen? So what's next? So let us be very clear. The world is not going to end. Humans are going to win this race against coronavirus. We all are not going to die. All industries are not going to go bankrupt. And we are going to go through some tough times for a few days. But afterwards, the life is going to be back to normal. But it will be different normal, not the normal what was in the month of January. So some changes are going to be permanent. And what those changes are, and how do we align our investments and strategy, that I'm going to talk about. Now, a large number of small and mid-cap companies in the world which are leveraged and promoters are weak and management is weak, they are going to go bust. So most of these restaurants, small hotels, they have working capital for a week. They don't have more than 1 week's working capital. Now, if the restaurants and hotels are closed down for a month, it will be very difficult for them to start. When the economy opens, the very first day, everybody is not going to go to eat outside. So the ratio of business is going to grow gradually. It's not going to spike back to normal. So the operation cost and fixed cost is very high, and it will be very difficult for them to sustain. So that's going to create another problem. Now, restaurants and hotels and small companies which don't have any borrowed money and they have enough cash of their own, they are going to survive. Now, The other thing which is going to happen is cloud computing and digital economy will lead the world. So we all understood the importance of digital economy. Now I give you a classic example. I was watching one show on the television, and they said that, high-rise buildings, when you go in an elevator, you touch the floor where you want to go. So there's a chance you get a virus there. So Apple is developing an app which you can download, and you go in any building, the security will check you through the iPhone. You don't have to touch anything. And when you go in the elevator, you can put the key number and scan and tell which floor you want to go, and the elevator will take you there without touching anyone. So that kind of new innovation is going to come, and that's the digital economy. So everyone will realize the importance of digital economy. Many people in India were reluctant to change. They were reluctant to change to go to paperless restaurants. They preferred cash business. That no longer is going to work. So everyone will have to adapt and adjust to the digital economy. Now, my organization, Simplicity, we were 100% digital. So we didn't see any disturbance or any pain in our offices closed in India and Pune for last 3 weeks, and we switched off. Everybody, and my entire team is working from home. I'm in US, Sanket is in US, and we have no issues. We are business as normal. So those who are in digital economy and those who embrace digital economy very well, they will come out with flying colors, and their business is going to grow. Now, that's going to happen. IT and cash-rich companies are going to win. Companies which have very strong balance sheet, which have no leverages, and managements are very clear with a very good vision, they are going to do very well, and they are going to win. Social distancing is going to be there forever. Now, even if the coronavirus, which is going to take 2 years to go, minimum 2 years, the world will find out a way to adjust and adapt and start the economy. Coronavirus is not going to go in next week or next month. Even the vaccination, it will take 18 months minimum, and you can't vaccinate the entire world's population in just on a flip of a switch. So it's going to take 2.5 years. But in the meantime, people will find a way to work out, start the economy, and get life to normal. And that's going to be through social distancing. So that is going to change our business modules, companies, and we'll have to adjust and adapt. Then there's other massive shift going to happen on the asset allocations. So in the old world, most of the people in India had 70 to 80% asset allocation to real estate. India as a country had 65% allocation to real estate and gold, and 35% was in financial assets. And those financial assets included PPF, postal savings, life insurance, and only 5% was in stocks and bonds. Now that asset allocation is going to get a massive increase, because at this time, in crisis of time, you can withdraw money from your bank, you can withdraw money from your stocks, you can withdraw money from mutual funds, but you can't sell any of your physical assets. You can't sell jewelry. Because unless you have gold in digital format, if you didn't have gold in digital format and you are in physical format, you can't sell gold. You can't sell real estate. Okay, gold you can still sell. It's still more liquid than real estate, but real estate is very difficult to sell. So people understand that important. And the other thing, as the need for real estate is going to be less as more people work from home, so there is going to be a massive reallocation of the assets, and that's the other change we are going to see. Now, my next slide shows is when is the coronavirus going to peak? When is the world going to start again? So if you notice that the coronavirus had impacted, there are 4 major areas, densely populated areas in the world. One is China, second is India, third is America, and fourth is Europe. Now, if you notice of this 4 densely populated area where the density is very high, China, coronavirus has peaked where it started. Then it went to Europe. They are also at its peak. It is at its peak, and now it's slowly flattening the curve. And now in America in last 2 days, if you see this slide, it's at peak, and they say it's projected that April 15, the coronavirus will peak in America, and the curve will start slowing down. So India is the only country, India, Indonesia, and Philippines, those are the few countries where the coronavirus cases have not popped up or shown an exponential increase like what they saw in Europe, China, or America. Now, why is that so? There may be multiple reasons. Because these are poor countries, their testing is not done. And I was trying to analyze. I was talking to one of my clients who is a biologist, and he said, "Do you know, Rashmi, how many people die every year in India? Every year in India, India's population is 135 crores. Even if you take 80 years of life expectancy, by natural progression, 2 crores people die every year. Out of 2 crores, 5 lakhs people die by road accidents, which is not a natural death. 5 lakhs people die on road accidents every year. Is that number highlighted anywhere? Nowhere. No. Does anyone know what are the root causes of people dying in India? Those data may be there somewhere, but nobody knows about it. Now, just because even the coronavirus figure, so there is no reporting mechanism or data collection. So India nobody knows what's happening there at a high level. I'm talking about. I'm not saying they're doing it intentionally, but we don't know what's happening there. But so in next 2 weeks we'll see how India manages that. So this is. But the most important thing which has happened, the most important country in the world is America, the biggest economy in the world. The coronavirus has peaked. Now, why I'm saying US is very important to watch, because US economy drives the global economy. So if US economy stabilizes and reopen, the financial markets worldwide will stabilize. And that's the good news. That's the good news we got in 2 days. Now, I'm just sharing with you, in last 100 years, every 10 years, something happened. Some bad news happened, and markets corrected sharply. So when markets corrected sharply, whenever markets correct sharply, it bounces back sharply in next year. And when it bounces back sharply, they by 7-8% in a day. So that's what we have been noticing in US and India. Now, if you miss those investment days, you miss. So here's the data slide which I want to share with you, that since 1930 to 2010, the 10 worst days and 10 best days. If you miss that, what happens? If you exclude those 10 best days and you were not in the stock market that time, you get 91% return. But if you were there invested in those 10 days, when the market rebounded very sharply, you get 14,962%. This data, I took it from CNBC website. The source is Bank of America, US Equity and Quant Strategy. That data I'm showing. So what I'm trying to say is, if many people think, I should exit the market and get back into the market, that's a wrong strategy. It's like this: when you're going from Pune to Delhi in a train, and suddenly in the middle of 2 stations, the train stops enough now, and you say, okay, I'm going to get down, have my lunch in the garden, and get back, catch the train again. It's a dangerous strategy. The train may suddenly start and move, and you are left on the station, correct? Same thing can happen in the stock market or investment. So you need to focus and continue with the strategy which what you had done. Now, I'll talk about this more going forward. But this was the important data which I wanted to share with you. Now, I'll also share something more. 2020 is a lifetime opportunity to invest and rebalance. Why I'm saying that? You're going to get a lot of bad news on television. So I'll share some bad news which is still not reported. There's still a lot of tourists, international students, families who are traveling abroad and who have got dislocated. Now, this is going to have a massive impact on education center, educational institutions, hotel industry, because those students they all will find it very difficult to get jobs if they have come to US. So they have taken huge loans. They'll go back, and next year's batch won't come here. So this kind of a lot of series of bad news is going to get reported in next 2 months. And every time you see the bad news on the television, you feel, why I'm investing. And also, in spite of bad news coming, you will see markets going up. Markets are volatile, and in the last 2 days, I got quite a few calls why markets are going up. 1 month back, I used to get questions why market is going down. Now I get questions every day why market is going up. So don't play with the market. Don't try to time the market. Follow the process. So let me give you another classic example. This coronavirus, no doctor knows there is a treatment for that, correct? Nobody knows. So what the doctors are suggesting: keep social distance, follow the process, wash your hands, and don't allow it to impact you. Same thing you have to do for your investments. Nobody knows where the market is going to go. So don't try to time the market. Don't let your emotions take charge of it. Follow a process. First thing, what you need to do is keep 6 months of your household expense in your savings bank account. You should not invest that money in stock market or anywhere else. That money should be in liquid in your savings bank account. You should invest only that money which you don't require for next 1 year, which is long term, in stock market or bonds, and you invest that for long term. And also follow a process. Don't try to put everything in one day. Go staggered, correct? Like how we do morning walk exercise. We don't try to walk for the entire week in one day. We walk 30 minutes every day. So that's the same way the investment should be done. Now, what I've experienced, I'm in this field for 40 years. In last 40 years, what I've experienced is the people who follow process, they always win. People who try to time the market, they always lose. Those who try to do random investments, they get caught. Now, which are the sectors? So now you follow a process, work out a strategy, and invest step by step. The other thing which I want to share this with you before I end my presentation and open for questions is that take a step back and look what's going to happen. Number one, which economy is going to recover? I've been saying this, those who know me, I've been saying for last 1 month that the first economy to recover will be US. The US market, financial market, will lead the rally, which is already happening. So watch what is happening in the US market. Now, every Indian should have 20% money in US, 15 to 20%. So there are some fundamental rules of investing. Yesterday somebody asked me a question, why shouldn't I invest 100% money in US? I said, no, you put 60% money in the country where you are going to retire or where you are staying. So one rule of investing is minimum 60, maximum 70% money should be in the country where you are staying. So if you're staying in India and you're retiring in India, your minimum 60, maximum 70 should be in India. The rest 30 should be outside India. And it should be in the other two global economies like US and Japan. Now, there are 4 big economies in the world in innovations. Which are the 4 economies in the world on innovations? Number 1 is US, number 2 is China, number 3 is Japan, and number 4 is India. Now, we all know that China has a problem of credibility issues. The data is manipulated, the accounts are manipulated, the management, we don't know who's running those companies, government or this, and there is a transparency issue. So I would avoid China at any cost. I would invest in US, Japan, and India. So everyone should have a portfolio, these 3 economies in their portfolio. Now, which are the sectors going to do well going forward? And those who know me, since 2012, I had worked out a strategy which was very defensive, that everyone should have 15% in US, 15% in IT companies in India, 10% in healthcare sectors, 15% in MNC companies, and the rest. I never promoted small cap, and maximum 15% in mid cap. And if you follow this strategy, you should be fine. You should be fine because the world is not going to end. We are all going to live. Economy is going to come back to normal, and only what is going to happen is our lifestyle is going to change. We are going to be more respectful to nature. We are going to be more uh, focused and more streamlined, and that's a good thing. So that's a good thing, and maybe a lot of good things will come out of this. Uh, 2 painful months we have gone through. The world will all respect more the mother nature. Indian cities will be more clean. People won't spit on the road. They'll keep safe distances. Driving will be good. So a lot of good things are going to happen out of this, and I'm very positive about it. Now, don't let your emotions drive now while investing. So with this, I'll end my presentation here, and I'm open for questions. And yeah, feel free. Okay, the first question I got: which sectors we should look for further investments, and how financial sector in India will do? Okay, very good questions. Now, I won't mention the names. I'll just take the questions, correct, for everyone. This so the sector, everyone should have investments in US IT sector, because in Indian IT sector and the US IT sector. So let me give an example. Today, the world is locked down, and which companies are helping them, the governments, citizens, to manage their affairs? Microsoft. I'm using Microsoft PowerPoint. I'm using Microsoft laptop. I'm using Google YouTube channel. I'm streaming my video on that. We are contacting you on WhatsApp, through Facebook. You're texting. So all this is on cloud services, which is Amazon. We are shopping there. So this technology, these companies which are allowing us to work, they are going to come out even more stronger and financially. So we need to have investment in those companies. That's one. The second thing, the financial sector, as the question regarding financial sector, yes, the financial sector is under stress in India, and it is corrected more than 40 to 45% in last 1 month. The banking and financial services stocks, after that Yes Bank and NBFC and ILS first episode, it has corrected 40% to 50% in the last 6 months. Now, without financial services is like blood vessels, correct? Without financial banking system, the economy can't work. So yes, one should invest it, and this is a good time to invest in that. But don't play with the stocks. Invest through a proper mutual fund and follow the process. Yeah. The next question is, China has become global leader in coming days. Or will China become a global leader and overtake US? Do we need to start investing in Chinese stock? Very good question. This question people ask me quite often. I would say no. China is not going to overtake US. I'll tell you that fundamental reasons for that. China is a superpower in manufacturing. Yes, I admit that. China has a foreign currency reserves of $3 trillion. No country in the world has foreign currency reserve of $3 trillion. India has about $500 billion. US is having about $400 billion. But China has a credibility issue. Language is a problem. None of the except for Alibaba, and which is also more domestic and little bit in America, but none of the Chinese companies are globally IT. I'm talking about information technology. They don't have Microsoft, Google, Apple, and English language, correct? So the world economy today, 70 to 80% of the world economy is in English, and it's driven by this huge American companies, and it's not going to change. It's not going to change that way. And the other thing, yes, there is a geopolitics issue going on between the China and US, but we'll stay away from that. In our lifetime, I don't see US giving place to China. That's not going to happen. And I would avoid investing in Chinese companies because of the credibility issues. So why I'm saying credibility issues? 2 days back, there was a Chinese company called Luckin Coffee. That Luckin Coffee is like what CCD, Cafe Coffee Day, was to India. Cafe Coffee Day was India, which pioneered that coffee culture, and the social meeting place and everything, but it went bankrupt. And Starbucks survive. I mean, Starbucks is growing, but Starbucks is the upper end. Now in China, there are two companies, Luckin Coffee and Starbucks. That Luckin Coffee came with an IPO last year, and just 2 days back, and that IPO was in US. 2 days back, it came out that it's under investigation for fudging the accounts. Like same thing happened in CCD, correct? The stock tanked by 85% in one day. Stock tanked 85% in one day. And there is no accountability there. I wouldn't invest in China, and I don't think many investors would prefer risk putting their money there. Now, the third question I have: how much time it will take for recovery? Okay, very good question. How much time it will take? Nobody knows where the bottom is or where the top is, correct? So as of today, they say the bottom was there, temporary bottom was there on March 25th, when the market tanked in one day 13%. India, US, both places. From there, the US market is gone up by more than 20 to 23%. Indian markets are also gone up by 20%, if you take today's rise also. In 2008, the crisis was in 2008, the market bottomed out in 2009 after the election. Now, this year also there is elections in US, and we don't know what's going to happen in the elections. I won't predict now who's going to win because this is not the time to talk politics, and anything can happen from today and next 1 year. But we follow a process. You may see market is going to be volatile. It's going to give you a lot of opportunities. Going up or down by 1,000 points in a day is going to be a norm for some time to come. The volatility is going to be high. So what you do is, the day the market is down, you invest in that day. The way the market is, I don't want anyone to trade, but if they need money, you can withdraw the money when it's up, or just build your portfolio, follow the process. And so let me give you an example. If I get a heart attack today, I'm working everything fine, correct? And suddenly I get a heart attack. I go to ICU, I get a treatment. Can I start walking next day? No, not possible, correct? It will take me 2 or 3 months. Recovery always longer than the attack, correct? So same thing, we got a sharp attack last month, and the economy is not going to recover in 2 months, 3 months. It's going to take time. So you have to look at for 1 year, 2 year, and 3 year period, and work out a process. Those who invested in 2008 and 9, I remembered I opened my daughter's account first time in 2008 when she got her first paycheck, and it was a panic situation. The Dow Jones had collapsed from 16,000 to 8,000, and when I went to open the account, the Fidelity guy told me, "You're a brave man." I smiled. That $3,000 check she got today is more than 15,000. 5 times more, even in this market. So if somebody had invested in 2008 or 9, what happened after 10 years? No problem. You make maximum long-term gains if you invest in a bear market. So this is a bear market. This is not a bull market. The markets are going to be volatile, but if you invest, so let me give you a different Mother Nature's. When you plow the seeds before it rains, you don't put the seeds after it rains, correct? You put the seeds before it rains, before the season starts. Farming, anything you do, the same thing is about investing. You don't invest after the bull market starts. You invest before the bull market. So those who are investing in the bear market always make maximum returns. So you need to continue doing that, but don't expect that market are going to recover next month, a year after. and be defensive, build your portfolio. So everywhere you have to have a strategy. What if things go wrong? And work with a good advisor. And don't tell him what he should do. Many people tell the doctors, I need this medicine. You don't tell a doctor which medicine you need. The doctor understands your need and advises you. So respect your advisor and work with him. Okay, the next question is, how long will low crude oil prices make the oil stock lucrative? Very good questions. So oil has got double blow, correct? One is the demand blow, which is from India, China. Nobody's driving a car, so the demand. And on the supply side, US, Saudi Arabia, and Russia, they are all competing to be currently number one producer of oil is America, number two is Saudi Arabia, number three is Russia. In Texas state, where I am today, Texas produces $5 million of oil every day. India consumes $1 million of oil every day. So there is oversupply of oil everywhere, and it may take at least 2-3 years for oil to come back to $50. It's not going to happen, and there is a lot of politics going on between these three countries. We stay away from it, and I wouldn't. I will only, if you want to invest, buy fundamental blue chip oil stocks which don't have debts, and that's it. I won't play the oil market. And oil being low, it's good for India. It's very good, correct? And one of the other thing which I want to mention, every country is going to pay the cost of coronavirus damage. So just think about this, how India is going to pay the cost of coronavirus. India is going to pay by depreciating the rupee. America is going to pay by printing dollars. They can afford to do that. India can't afford to do that. So you will see the Indian rupee depreciating against the dollar 4 to 5% every year for next 5-6 years. So that point you have to keep in your back of your mind while building your portfolio. Okay. And the next question: Google, Amazon, Zoom, Microsoft. Is there any fund directly investing in those companies? What are the ways of investing in US? Also, pharma sector would be a good bet. Yes, pharma sector is a very good bet long term, and we have making all our clients invest since 2012. We have been doing that. When that Reliance Nippon Pharma Fund NAV was $65, we have been in 65 rupees. We have been investing since then. Yesterday it was 160, and 52-week high is 165, which it might reach today or tomorrow. So in this market, you see pharma sector at 52-week high, which is a very good thing. So pharma sector is a very good bet. As far as the other part of the question, Google, Amazon, Zoom, Microsoft. Yeah, there are two funds in India. One is by Franklin Templeton and one is by ICICI, which invest directly in US equities. You can do that. Through this mutual funds. It's a very good way of doing that. The third way is you can buy NASDAQ ETF on National Stock Exchange. But I don't recommend that, because that NASDAQ ETF is very volatile and there is very little liquidity in India because it's not very popular. The mutual fund is a safe bet, and also the spread between buy and sell rate is very high in that ETF. That ETF would be a very good in long term when the volumes increase. Just now volumes are very low. I would invest through a proper mutual fund in India. Yeah. The next question, and there is also a way that you can open directly an account in US, but that is for seasoned investors, not for small amounts. So if you want to build a portfolio, the mutual fund is the best route. Next question is, are there any Indian companies which are working on cloud computing or upcoming technologies of the social okay? No, not listed companies. There are quite a few unlisted companies which are working, and there are small startups working in Bangalore, but they will all be acquired by these big companies. In India, the best option we have is TCS, Infosys, and the top 5 Indian IT, Wipro, and those companies we have. Unfortunately, we don't have. India doesn't have any good hardware IT companies and innovative companies. India has a service provider. Yeah. Will IT companies face a cash flow crunch issue more than revenue impact? Short term, yes. Long term, no. Because yesterday only, I was contacted by one CEO of a US company on which Indian IT companies they should outsource the work. So I haven't responded to them, but I said globalization is going to be more and more. Indian IT companies will go through short-term pain, but long-term they will survive and they will do well. Because India has the highest number of engineers and programmers. US doesn't have that many engineers and programmers, so they'll continue to depend on India. And the only thing which may happen is there will be fewer people coming to US and there will be more work going to India. That might happen. That change you might see, but Indian IT companies will continue to be cash rich and they will do well. So even Indian IT companies will get more business from government of India. No, IT companies will do very well because digital economy is going to grow. They are going to grow, and at current valuation levels, they are very attractive. Okay, what are the old investments is okay to average out uh, in shares and mutual funds? Now, averaging, I wouldn't give a general specific answer. Or people should not. So, if you have five small cap or 10 small cap stocks or mutual funds, you should consolidate. All small caps and mid caps will take longer to recover. So what you do is, but you don't sell your small cap and mid cap and go to large cap. Don't do that. You improve the quality within the small cap. There are good qualities. Mid cap, there are good qualities. Sell the bad quality stocks and buy the good quality stocks. That you should do. I won't give any specific company names or this because this is, I don't want to promote investments in this seminar. I just want to tell people that world is not going to end. It's going to be a good place. We are going to come out of this, like how we are maintaining social distancing to avoid the virus. Same way, social distancing is a process. Same way, investing to protect your money, erosion in your wealth, follow a process. That's the objective of my today's talk. And be diversify globally. Diversify globally. Don't invest 100% money in India. I'm not, no, India is a very good country, very good place, but you should hedge a little bit. Okay. Any more questions?
Yeah.
Yeah, Sanket is helping me. Are you suggesting short-term positional trading over long-term? As per your 10 goods days theory? No, I'm not. Okay. So I always tell people, the lesser you trade, the better you are. And the same case is with me also. Whenever I try to trade myself, my staff will tell I always took a hit. When I invested, I made money. So there are no shortcuts in life. There are no shortcuts in life. Yeah, it's going to be a trader's market for a few days, but you have to be a professional trader. If you are not a professional trader and you are an investor, okay, among what is a professional trader? Out of 1,000 traders, only 2 traders are professional. 998 people will lose money. I don't want anyone to get hurt by trading. Investment is a good strategy. Focus on your job, focus on your career, focus on your family, and leave the investments by following a process. There are no shortcuts. Yeah. And don't play derivatives, don't do options. They're toxic. Okay, one of the reasons, okay, very good point. This question was one of the reasons why the market came down so fast this time. It came down because of leverage positions. So for every 100 rupee investing, there were 900 rupees which were borrowed and were in derivatives options market. And when this kind of volatility happens, the banks and the stockbrokers had to force the investors to liquidate those positions. And when you liquidate $900 of this and there's only $100 investor there, market always goes down. And that's what happened. Now, most of these positions have been liquidated. Now, so you won't see the drastic fall what we saw last month, that kind of steep fall. You will see a gradual correction and gradual upward movement. But eventually market will go up. Yeah. Yeah. How will real estate business do in smaller towns in India? Not good. Real estate, so everybody needs only one home, correct? You don't need, so there was a couple of years back, there was a fad of buying vacation homes, correct? In US that is gone. Same way, people having multiple properties, that is going to go. That's going to go. Only the need-based will be there. Yes, because of this virus, there will be some population moving temporarily from urban areas to rural areas if IT infrastructure is there. But that you may see that trend in US, but not in countries like India. So I don't think the markets will. I'll see more pain in rural areas than. Bombay will be the first place to recover. Pune will be the first place to recover, because there is a huge economy. So I'll give you an example in US also, or you take Europe. Whenever real estate crashed, the first place the prices recovered was New York. In Europe, it was London, because there is a huge economy there, correct? The huge economy there, huge financial market. Same case is going to happen in India. The first place the property market will recover will be Bombay, then Pune, Bangalore, those kind of cities. The rural will take much more time. Okay, what is your opinion about manufacturing sectors such as automobiles, textile? How much time do you think they will take to recover? Again, a good questions. So, I think manufacturing sector will go in a consolidation phase. It's bottomed out. Good companies like Siemens, Cummins, Thermax, all those kind of companies will survive, and the valuations are attractive. Even companies like Bharat Forge, all those, L&T, see L&T, BHEL, wow, Government of India, the stock has from 400 has come down to $20. Yes, manufacturing company, but I wouldn't bet on stocks. I would buy a good fund, mutual fund, which is infrastructure. So you get the benefit of the sector. You don't try to identify companies. So when you identify a sector and you identify companies, you are taking much more riskier bet when you play the stocks. When you like a sector, you buy a mutual fund, then the risk of identifying company goes to zero, correct? Because the fund house, they professionally do that. So yeah, manufacturing sector is good. It will bottom out, and Indian manufacturer will revive, and they'll do well. They'll do well. So next question is, India's growth story for last 10 years was powered by domestic demand and consumption. As suggested by you, there will be demand changes. Is the consumer discretionary still good sector? Yes. Okay, so here's interesting things are happening, correct? So you take the urban population in India and you take the population in US. Everyone used to stock their groceries for 1 week or 2 weeks. This new generation, our older generation in India used to stock food for 1 year, correct? I remember my parents, we used to stock wheat, rice for entire year at home. But I never did that. We never did that. And but now that trend will come back again. So with this coronavirus has taught us, then we'll be eating more food at home than in restaurants. So the consumption pattern is going to change. Grocery stores, I'm saying companies like Walmart, in the US, Sam's Club, Costco's in US. In India, companies like Avenue Supermart, Star Bazaar, they will do well. More people will go to buy groceries and stock, and companies like Hindustan Lever, Nestle, more branded goods, they'll do well. Yes, they will do well. Because we'll now the focus will change and people will eat more food at home, so they will buy more. Uh, See, when you eat more food in restaurants, the restaurants they buy groceries in bulk and not of good quality. When you cook the food on your own, you buy better quality groceries. So more brands will come into place, quality will come. So yes, that shift is going to happen worldwide. Worldwide, that shift is going to happen. Wow, very good, interesting question. Can we withdraw money from PF, FDs, and other liquid assets like gold and invest in stocks now? How should be the asset allocation process be followed? Should we manage asset allocate? Should we manage? Yes, it's a good question, but never do anything extreme. You should have FDs for next 1 years of your household expenditure. Never do that. You should be able to sleep peacefully in night if markets are volatile. So work with your advisor, have a proper asset. You should have 3 to 4% investments in gold through. I'm not talking about jewelry. Jewelry is an expense. If you buy physical gold, it's an expense. Write it off. I'm talking about you buy a gold in a demat format or in a mutual fund. 3 to 4%. It's a good idea. You should have 25 to 30% in debt funds. Debt funds means fixed deposits, bonds, corporate bonds, and all that, and 70% in stocks. Of that 70%, so I'm just giving a general average. Okay? Of that 70%, 15% should be in US stocks, 5 to 10% should be in Japanese mutual fund, 10-15% should be in Indian technology. Follow that process and rebalance that portfolio once every year. You'll So even in this market, clients who have been following our advice since 2012, they're doing well. They're doing really well. They have not taken. Uh, Now, the other thing which I experience in my portfolio is at times, clients suggest us, oh, I don't want this, I don't want that, and we allowed them to do it. Their portfolios took very big hit. So going forward, when we work with our clients, we are going to say, if you follow the process, then only we want your business. Otherwise, we don't want your business, because we don't want. You can't tell a doctor, I want this medicine, I don't want this medicine. There is a relationship between all the different kind of medicines you take, and either you trust the doctor or don't trust the doctor. So work with an advisor with whom you trust. Don't try to let him do his job, you do your job. And so we all watch television and we learn. You can't do investments by watching television. It's a very dangerous game. You can't watch. Okay, can you do a surgery by watching television? No. He has to go professional training for 10 years. Same thing is about investments. It's a very hard, expensive lessons if you do it on your own. That's another trend we are going to see. A lot of people have burned their hands, and that trend is going to change. Uh, yeah, next question. How many we have still? Very good question. Yeah. Okay. My question is, in family businesses, we always used to discuss to have one different citizenship passport like US, UK, considering their security and health systems. But the current situation is very confusing. Oh, wow. Yeah, this is a very good question. Let me put it this way. If you can afford to do it, yeah, you should do it. This I'm telling based on my personal experience. Based on my personal experience, US is, in spite of all the turmoil happening in the world, and so televisions will talk. So if you take any televisions or any commercial media, people will talk most about the number one guy, correct? So the number one actor, actresses, everyone gossips about them. Same thing of number one economy in the world is US. So there's a lot of gossip about that. But US is one of the best economies of the world if knowledge, professionalism exists, it's in US. They will solve the problem. Maximum innovations in last 50 years has happened in America. They have a very big advantage of massive land infrastructure, and their leadership is very good. Dollar is one of the strongest currencies. Yes, if you can afford to do that, you should do that. You don't have to be. There is no. If financially you can afford to do that, 100% you should do that. My answer is yes. Now, if you are trying to take a loan and get a US citizenship on a work permit, then my answer would be different, and it would depend on case-to-case basis. I would like to have more details of the person who has asked the questions, and then I can give up appropriate advice. There is no blanket yes or no for everyone. But having one person citizenship abroad is not a bad idea at all. So again, the same similar question. What is your view on the financial sector as the quality of assets is deteriorating? Yes, the quality of assets have deteriorated drastically in 5 years. One after another problems we got. But now the problem is at its peak. You can't live without financial systems. The world economy, Indian economy cannot function without this thing. I think we are very close to the bottom of the financial banking sector. There will be some pain, but without that, Indian economy doesn't exist. That cash economy is gone, and big banks will survive. Good financial like Bajaj Finance, HDFC Bank, Kotak Bank, ICICI, Axis Bank. Then financial services, okay, let me give you another different example. Financial services does not necessarily mean only banks. It means also mutual fund companies. It also means insurance companies. Now, HDFC mutual fund company, more money is going to come to mutual fund companies now. Nippon is listed. ICICI is going to be listed. So yes, financial services you should invest. It should be part of your core portfolio. What would be your new advice? What would be your advice to new investors? How should they start? Can we invest online? Yes, everybody should invest online, but not on their own. So, can I make my medicine on my own on watching online? No. You see, let me give you an example. For new investors, this is a very good time to start investing, building a portfolio strategy, and allocating the assets properly. And you can't go wrong if you start investing now. Like my daughter, she started in 2008. Today, she is very successful. I would recommend anyone who starts investing in now, the risk-reward ratio is for reward. Risk is minimal. I think I answered this question, correct? Yeah, I answered that question. Yeah, I think I'm done with this. I appreciate. So let me tell you a few things. If you like today's webinar, please subscribe to our YouTube channel. I'm going to do more and more this kind of webinars, again, digital economy. And this is a very good way of spreading education and knowledge. Subscribe to our channel. Give me a feedback. Put your comments on the channel, so it will be good. And also every week we publish a lot of social media posts on the current events, and that the trends we see and the knowledge we share on different parts of the global economy. So you can go to our website and see that channel. And we are knowledgeable, and I have a very good team of chartered accountants and highly qualified people working with me. And feel free to visit our website or contact us if you need any advice. Yeah, and one more question I got. Okay. So let me talk about my little bit my background. I am a chartered accountant from India and a CPA from US. This is my 45th year of working. I've been working right from the age of 16, and throughout my life, I've been in financial services. And I'm basically by nature a planner, and it was my dream to build a advisory institute company in India where professionals work. So I have a team of 10 professionals. We have offices in Pune, Bombay, and Aurangabad, and we are 100% digital. And if anybody wants any kind of services, please visit our website. And we build portfolios. We build global portfolios, and we have global knowledge. We don't have knowledge only about India. We have knowledge about global financial markets. That's our expertise. And feel free to contact Jaideep, Sanket, Pooja, Sonia, or any of our team members, and visit our website. Yeah, anything else, Sanket? I need to. And I appreciate your time. And thank you very much. I enjoy. This is a weird feeling. I'm talking in front of computer. Normally, I talk in front of audience. I hope you enjoyed your time. Thank you very much. Thanks. Bye bye.